Hi guys, thanks for tuning in to another episode of Nuggets News. Today I want to answer the question, is history about to repeat? Are we about to see a huge fundamental catalyst for Bitcoin price and adoption? Now, most of you know that 10 years ago in that Genesis block when Satoshi created Bitcoin, he hid this message about the banking bailouts. And I've done plenty of videos about the GFC. I recommend you all watch my top 10 finance and economic documentaries. But we know the story about how there was money printing, the banks was bailed out and saved, the taxpayers footed the bill, the bankers all got their bonuses, and nothing changed. And here we are now on the precipice of another downturn, and they're already starting to talk about more QE and so on. So if we have a look at the gold chart, this really tells a story. Now, back in 2008 when the GFC started, gold was above $1,000 and it fell into the 600s as we had the scramble for liquidity. When everything was selling off, you had to sell your gold as well to meet all your margin calls. But once the dust settled, people started to price in, hey, if central banks are going to print money and deflate the value of our US dollars, we want to seek the safety of gold and these other non-fiat assets. So gold ran up to $1,900. Now, probably went up pretty parabolic in terms of stock market rallies, and it did start to correct. But what we've since seen over the past 7 or 8 years now is central banks pushing this theory that, hey, that was all a one-off. It didn't actually result in a lot of inflation, so the people weren't so scared about that and they pulled their money out of gold. And central banks promised that they're going to unwind this. They're going to put interest rates back to normal. They were going to unwind all those bonds that they bought with the money they printed up and so on. And since then, we've kind of been in this equilibrium pattern. And this is why I love technical analysis, because it tells us this story where people are waiting to see whether or not central banks were bluffing. Are they going to raise interest rates and get everything back to normal? Or just in the past few months, they're starting to talk about more QE now and possibly negative rates. And if that happens, I think people are going to call their bluff and say there's no way we believe that a second time round, and gold is really going to take off. Now, if you're a sovereign wealth fund, you've got billions or trillions of dollars you need to park in a safe place, you're going to put a percentage in gold. Bitcoin is not a mature enough asset class yet where you can park trillions of dollars in it. So gold is going to see a lot of that safe haven demand. But during this period when gold's been correcting, that is really when Bitcoin has been maturing and becoming a mainstream asset. And we're starting to see some investment products go to Wall Street, but it's more for the individual who wants to bypass the banking system, where Bitcoin becomes that really attractive option, why I think it's going to increase in price. So let's take a look at a few of these events throughout history. And the first one was back in 2013 when we had the Cyprus bailout. So if you don't know about this, if you were a Cypriot with a bank account with some money sitting there, you had a percentage of that taken off you from the government, and they said, we are bailing out the banks. They've got themselves into a sticky situation, but you are going to foot the bill. And a lot of people were upset at the time. This led a lot of people to trying to get into Bitcoin and get their money out of a bank account so that you didn't have to take that haircut, as they called it there. And we know that these laws are being written into a number of other countries, including Australia. So if we have a financial crisis here, banks get into trouble, your money's not safe in a bank. They will take a percentage of it to shore up the financial system. The next event was in 2015 where we had these Greek ATM freezes. So back then we had 1,000 Bitcoin ATMs being shipped to Greece because people wanted another option. You were going to an ATM in Greece and being told you can't get out more than a few $100s a week. Now, some banks had a $100 a week limit at the time, and others just didn't fill up their ATMs. So they told you that you could get out a few $100s, but when you actually went to get money out, there was nothing available. You couldn't get your hands on your own money in your own bank, in your own country. That's pretty crazy. And this really led a lot of people to Bitcoin at the time. Now, Bitcoin was still a bit of a wild asset and people didn't really know how to use it back in 2015. But what I'm building towards in this video is how Bitcoin has matured and how this is going to continue to happen. So next up here, we have Chinese capital controls at the end of 2016, one of the things that sparked Bitcoin's next phase of its rally. And in China, you were told that you can't take large amounts of money out of the country. China want all that liquidity, all that money sloshing around to be in their own country, pushing up the price of stocks, real estate, their economy, and so on. So if you're in China, what do? Well, you try and get money out of the system in other ways. And one of the things I covered in my documentary was all those deficiencies in the Australian housing market, where there was a lot of Chinese just laundering money and getting money into Australia in any way possible into a house, because you're not allowed to withdraw dollars, but you can spend your dollars on a bank account with a transaction. So look, all these were ways that people tried to bypass Chinese capital controls, but if you could get your money into Bitcoin, you had a way to get money out of the country, and that put a big premium on the Bitcoin price in China at the time as well. Next up, we have 2017 with Japan coming out and saying that we officially recognize Bitcoin as legal tender, legal currency. So this sparked the big rally that we had all throughout 2017. And a lot of you probably got into Bitcoin after this happened, because it made Bitcoin pretty much legitimate for the first time. Now, this is interesting because Japan's economy is a couple of decades ahead of other Western nations in a lot of ways, because they had that big tech boom in 1990, that big bubble and crash, and the Chinese central bank tried money printing, low or negative interest rates. They've been buying back stocks, ETFs, absolutely crazy stuff that didn't exist in economics textbooks, a number of years ago, and Japan have showed us that that doesn't work. You can't just print money to create prosperity. So this is the case, the test case for the US. If we have another recession, Australia, what are we going to do? And it's going to be really interesting to see how people's opinions of central banking changes in the coming years, and what is politically acceptable to do as well. Now, last year, you all probably know the story of Venezuela. They had that runaway hyperinflation that led to a lot of people wanting to seek the safety of Bitcoins, and local Bitcoin's volume in Venezuela absolutely went exponential in terms of the amount of money in their local currency going into Bitcoin. But they actually had a fair bit of buying a few years ago as well. It was only recently when their local currency, the Bolivar, really devalued that we saw this really go exponential there. So this brings us to today's story that I want to focus on, and that's Argentina. So Argentina is a country of around 40 million people, around 10 million more than Venezuela with around 30 million. So this is a big country, and we all know that Venezuela got the crypto community talking. Argentina would very much spark another rally and wave of excitement, get people to go into Bitcoin. So inflation is currently hitting 50% a year there. We know that once you hit that spiral and get out of control, it doesn't usually come back. So this is only going to accelerate into hyperinflation, and anyone there is just losing their life savings by having it in their local currency. So even if you bought Bitcoin in Venezuela at $20,000, you've still saved more of your purchasing power and made more money than if you would have just sat in your own local currency. And that is the same approach that Argentinians are going to take if hyperinflation starts to pick up. And we are already seeing that here. As you can see in their local currency, volumes on local Bitcoins are starting to pick up. People are choosing Bitcoin over the banks. Now, in terms of the number of Bitcoins, again, it's a bit lower because Bitcoin price has gone up so much since a little while ago. But what this shows you is that a lot of people are or do have the means to get into Bitcoin in Argentina once this starts. So let's look at the top 10 countries using Bitcoin, and Italy at number 4 is the one I want to focus on. I've touched on Japan. We know that speculation from the United States. We know Korea goes mad for crypto, but it's Italy. Italy in their debt crisis, which I think is going to make Bitcoin legitimate for so many people around the world. If we have this talk about Italy having to kick the can down the road again, this will be the 4th or 5th time when they've been the most indebted country in the Eurozone and say, we'll pay it next year, we'll pay it next year. The problem that we see here with the euro and the dynamics of how this all works in central banks is something that we discussed with Professor Steve Keen the other day, where you're being told that you have to be fiscally responsible and not spend too much money, but you can't ever get your economy going if you don't spend money on certain things. And the private sector is completely tapped out. As we see in Australia, private debt is huge. We're not going to have this huge spending boom come from the private sector. So in some ways, you need government to support and spend on infrastructure and other things in the meantime. And this is really the current stance of where central bankers are debating. Should governments be able to print money? Should it be up to central banks? How do we do this? Do we just take interest rates negative so people can go into more and more debt? And there's no real right answer at the moment. There's 3 or 4 different theories about how this is all playing out. And you can hear a lot of that from that chat we had with Steve Keen recently. If we then look to the biggest economy in the world, or the one that everyone's familiar with, and that is the US. So China and the US are actually pretty close now for the size of their economies. But it's these unfunded liabilities that people are being very mindful of. So 124 trillion of, retirement, healthcare, all these things that have been promised. Now, currently that debt's at 22 trillion. If they want to give everyone what they've promised, that debt is going to go absolutely bananas. Now, we know the economy, the GDP, is far, far smaller than that at 21 trillion there. So where is all this money going to come from? We can't just keep spending 6 times more than our entire GDP. In the United States, just paying the interest on their debt at these low interest rates is becoming almost impossible, and it's already spiraling out of control. So there's only a couple of ways that central banks can even do this. It's either print more money, a debt jubilee is another one that's been thrown out there where we just wipe all debts and wipe the slate clean, or push the private sector into more and more debt. But something just doesn't add up with the maths here, guys. We can't keep going down this path. And that's why I think in more and more countries, even if it's not the US, fiat is going to continue to leak, and I love the name of this website, into Bitcoin here. And this is why I've done so many videos about Bitcoin, our 3-part series about can it hit $1 million, super long term, but it doesn't have to be Australia or the US that adopts Bitcoin. It can be one by one, Venezuela, Argentina, Italy, and these big countries that are now familiar household names turn to the safety of Bitcoin. So I hope you guys have enjoyed that video. Please smash that like button, subscribe if you haven't already, share these videos around, and thanks for tuning in, guys. Cheers.